obviously, no entrepreneur can have answers for everything or be able to see what's going to happen. But as an investor, if you see them, you're able to guide them and bring up pitfalls that they may not see, because they all have their blind spots. Yeah. I may walk a bit, but just around here. Yeah, 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 yeah. That's fine. Yeah, so that. It's same with me. Same first time. So just put this on silent. Okay, it's already on silent. You don't want once you're giving a talk, your phone is ringing. Yes.
Hi, everyone. I think we're going to wait a little bit longer. Just people are trickling in, so maybe 5 minutes before we start. We're going to go ahead and start with the opening today before we start launching our first session. And I'm so pleased to welcome Yabe Zhang, a senior energy specialist with ESMAB at the World Bank, to be our opening for the finance room. A round of applause for Yabe.
Thank you, Lindsay. Thank you for the opportunity to be here. So my name is Yabe Zhang. I manage the World Bank's Clean Cooking Fund. I think many of you may know me. And I'm very excited to be here for this innovative financing session. Because as we manage a Clean Cooking Fund, we constantly think about how to mobilize finance, how to structure finance to achieve scale, and to support long-term market sustainability. I want to unpack a little bit about our theory of change or our journey of how we think about finance. So if you look at the sector, it's very much under-financed currently, under-delivered. And we know that there's a significant financing gap depending on how you count the investment needs. And from ESMAB World Bank, we estimate that if we achieve universal access to clean cooking solutions by 2030, we need 25 billion per year. And the majority, so that 25 billion mainly count the private investment, mainly count the public investment, and some of downstream infrastructure investment from the private sector. And if you count the overall private sector, it will way over that amount because the majority of investment have to come from private sector. And the role of the public sector. So there'll be another session talking about subsidies or not subsidies, the role of subsidies, because you always have question, okay, why the public sector need to invest in this market? And our theory changes, okay, the sector is under-delivered because there's public benefits. You have climate benefit with global public good and gender and health. That all have public elements that are not fully internalized by the household, the users, and also by the private suppliers. So that's why that's a typical market failure that justify the public sector to intervene. So that's basically the theory why we need to step in. And then there's a question, okay, how to best structure the public financing to catalyze the private financing? Because in the end, public financing is always limited. How to unlock and then catalyze the private financing? So one way is to say, okay, there's affordability gaps, right? Because the households are not internalized, that externalities. Now, so that's why we need to provide subsidies to fill in the affordability gap. And now I think we have this unprecedented opportunity regarding the carbon market. That's also the role of carbon, that carbon actually price the value of climate as part of public global good. And then now the question, okay, how we structure it, and what is the opportunities of carbon versus risks? Are there also risks? So I would have to argue that there's no, the opportunity does not come without risks. That's why we constantly struggling, okay? We, on one hand, for a lot of our projects, we implement results-based financing approach. So we say, okay, based on the results achieved at outcome, and impact level, essentially we want to help to achieve the climate, the health, the gender impacts. And we help to fill in those gaps in terms to bring in the private investments. Now that there is explicit price on carbon, okay, you can come in with carbon and then how the carbon will interact with RBF. I think many of you probably in the business to consider the interactions of RBF and carbon. And one risk is that we already see that some companies are able to use carbon without any RBF and is still able to deliver a significant number of stalls without upfront, without the cost to the households, basically free distribution. So that's one model that we also see can pose some significant risk in terms of long-term market sustainability. So it'd be great that at this forum we have opportunity to discuss, to exchange that from the private sector and from the public sector, how we can work together to ensure the long-term market sustainability and how to tap into the carbon market, either voluntary market or the compliance market, and really look forward to such discussions and exchanges, and to learn more innovative ways how to help us, the World Bank and the government, to structure better financing instruments. Thank you.
Thanks so much, Yabe, for launching the room. It's now my pleasure to invite up Shrikant Avi, who's the Director of the Venture Catalyst Program at CCA.
Hello, everyone. And we'll first start with a brief session, 30-minute session on just perspectives of innovation, which is finance at scale. As it was mentioned in the opening remarks in the opening plenary also yesterday, I think 2022 has been a pivotal year for clean cooking sector in terms of just the amount of capital that has flown to some of the companies in our sector. So compared to last year in 2019, 2020, the amount of capital that has flown in this year is already 4 to 5 times. And we wanted to highlight that some of the financial intermediaries and fund managers have played a pivotal role in just bringing this capital into the sector as well. And today we wanted to highlight the work and share experience of 2 of the fund managers who have been very prominent in our sector. First is Acumen, they have invested in our sector for the last 10 years and invested in companies such as Burn, BioLite, Copa Gas, which is now Circle Gas as well. So some of the very prominent companies in the sector. And also the second fund is Spark Plus Fund, which was just established this year. And it is one of the first clean cooking sectors focused fund in our sector as well. So I'll quickly first like to invite Andrew Taravili, who is the Associate Director at Acumen, and he'll talk about the lessons learned from 10 years of investing in the clean cooking sector. Acumen also has a successful track record of an equity exit in the sector, which is also very rare. So we'll also talk about that. So without further ado, Andrew, if you can come on the stage and talk about what did we learn from 10 years of investing in the clean cooking sector.
Thank you very much, Shrikant. Good morning, ladies and gentlemen. As Shrikant introduced, my name is Andrew. I work with Acumen Fund in West Africa, where I lead our portfolio work. Acumen is a global community changing the way the world tackles poverty. We do this by investing patient capital in early-stage companies whose products and services transform the lives of the poor. Also, through Acumen Academy, we are building a community of social innovators and change makers tackling some of the world's toughest challenges by providing them with practical tools and resources to create solutions in an interconnected world. So the clean cook stove sector has been the most profitable and one of the most impactful sectors that Acumen has invested in. Yet, capital has not followed our investments. For context, investment in the sector have grown to $71 million in 2019 and $61 million in 2020, according to the Clean Cooking Alliance. Yet this is woefully short of the billions required annually in order to achieve universal access to clean cooking by 2030. We've chosen this moment to share our success as an investor with the hope that this will reignite capital in the space. Since 2015, Acumen has invested over $6 million across 5 companies where clean cooking was a focus of the investment. These include Burn, BioLite, Copa Gas, Greenway Grameen, and Green Energy Biofuels. Across all these companies, they've sold over 3 million cook stoves, reached over 15 million lives, mitigated over 18 million metric tons of carbon emissions, saved over $1 billion for people in poverty, and created thousands of jobs. While we have been virtually exposed to virtually every type of technology, wood, charcoal, EPCs, LPGs, and ethanol, the core of our success has come from improved biomass cook stoves, which make up 69% of the total clean cooking sales revenue tracked in 2020, up from 58% in 2019, according to CCM. In all these companies, we have funded lean data studies, been active board members at various stages, and supported several of them to unlock further capital to increase their impact. Many of the details I will share today are unique to the companies we invested in and are unique to the companies we've invested in their context. Some of the stories are polar opposites. Selling firewood cook stoves in southern India is very different from selling EPCs in rural Kenya. But other elements cut across. In the presentation today, I will look at a few overarching themes. So what drives impact? In the beginning, our chief metric was to reduce stacking, as we saw it as diluting our impact. Over time, though, we've become more relaxed on this. We all in this room probably own different types of cooking appliances at home, microwaves, stoves, and others, but that doesn't reduce their impact. In addition, we've seen that over time, our company's products steadily reduce the use of fossil fuels, which creates for a cleaner and healthier home. Our companies have succeeded by listening to customers and catering to their preferences. Early versions of cook stoves were sold at negative margins because that was what the market was willing to pay, even for higher quality products. The inherent tension of providing high quality products for people who can afford to pay very little is one that every cook stove company that Acumen invested in has had to deal with. In a recent report, it quoted that despite fuel savings of $237, households were only willing to pay $12. We've also seen that overwhelmingly, customers have preferred larger cook stoves than we thought they needed. Ankit Mathur, the CEO of Greenway, compares it to Americans buying pickup trucks. Do you actually need all of that every day? No. But you want to have it when you need it. Besides, larger cook stoves are actually easier to sell. The percentage margin may be the same, but that absolute margin makes a difference. It allows you to pay higher commissions and absorb shocks that smaller stoves will leave you with only pennies. A recent study by UC Berkeley and University of Chicago, published this year, indicates that burned cook stoves generated savings of over $700 over a two-year period. $214 was financial savings, $221 was time, with the remainder $265 or 38% was benefits from the environment, from reduced emissions. So $1 out of 3 was a benefit for all of us. I'll get back to this later. Cook stoves take patience, both to refine the product and to drive affordability. Grants have been critical for our companies to refine their product and explore new markets. And debt is obviously vital to achieve scale, although we've seen instances of companies taking on too much too soon. But what Acumen and other investors in this space like Lundin Foundation and AHL Ventures have brought is early stage, flexible capital that shares the risk with the companies and grows with them. Our companies have achieved affordability through a mix of operational efficiencies, scale, consumer finance, and carbon finance. We cannot overstate the importance of carbon finance. For the first time in history, companies and citizens of high-income countries are paying for positive externalities. Climate change is a classic example of negative externalities being unaccounted for in the push for economic growth. Sub-Saharan Africa, outside of South Africa, has accounted for 0.5 percentage point of historical emissions. But alarmingly, is exposed to climate change. Yet in cook stoves, we see an acknowledgement that people in poverty cannot bear the full cost of the carbon transition. Our companies have cumulatively raised hundreds of millions of dollars in carbon finance. And it is heartening to see all the carbon finance coming in today, to see what Spark and the Spark Plus Fund is doing. Our companies, at the same time, we need to be cautious. High quality, sustainable growth is only going to come from cook stoves that are being responsibly distributed to customers who use them consistently. There is more we can do to tighten up the methodologies and standardized verifications in order to reduce the likelihood of fraud and ensure that the actual impact is what is being monetized. We have exited or are in the process of exiting copper gas, green energy biofuels, and greenway, and remain heavily involved in burn and biolights, both of which we have made follow-on investments in. Our exit in copper gas came from a strategic acquisition, while in greenway, it came because the company had achieved profitability and sustainability and was willing to buy back our equity at an agreed-upon multiple over several years. While I can't share our exact positions, our multiple on invested capital is more than 3 times our historical portfolio average. Although much of that remains outstanding, given that bulk of our capital was invested in 2015, 2016, it's too soon to say what our returns will look like on an IRR basis. We are hyper aware that the future is electric, especially on the cooking front. But our work with the MEX team over the last few years has shown us that a lot of improvement is needed to make EPCs, induction stoves, and even LPGs available, affordable, and adopted. Our companies are tackling the challenges of affordability, customer education, consumer finance, and supply chain bottlenecks. A particular example I'd like to highlight is that our companies in Sierra Leone, it took them about 6 months to get a container of EPCs into the country. Companies are going to continue to need grants to refine their products and prove out their distribution models. They will need affordable and reliable electricity to sell into, and they will also need the right partnerships between manufacturers, distributors, and power companies to make it work for the customer. But our experience in the sector gives us tremendous belief that this can be achieved. Our story cannot be complete without recognizing the entrepreneurs and leaders of these companies who have shown resilience, not just the CEOs and top executives, but the agents and the factory workers. Acumen is hopeful that clean cooking is long last emerging from the valleys of the Gartner curve and demonstrating that sustainable businesses can be built through a combination of well-designed, robust distribution networks and appropriate subsidy. While cook stoves companies do not easily lend themselves to the VC model as they are operationally heavy and don't have the hockey stick growth, they can be viable businesses. And they are exactly what the impact sector claims it wants to see. Cook stoves have been an unbelievable investment for Acumen. Tell the world, thank you.
Thank you, Andrew. And now we would like to invite Xavier Pierluca, Managing Partner and Enabling Capital, and also Investment Director at Spark Plus Fund, who will talk about his experience of just setting up the Spark Plus Fund, which has been a very long journey. Being part of the journey myself, I know how much hard work, toil, and persistence goes into setting up a new fund. And personally, I feel one of the remarkable features of Spark Plus Fund is the ability to attract so much investment capital from a variety of institutional investors who have never invested in SDG 7 or clean cooking before. So with that, I would like to invite Xavier on the stage to speak about how did we set up a clean cooking focused investment fund.
Thanks, Ketan. Okay, you can hear me well, I guess.
So good morning. Thank you for being here. I'm Xavier Pierre-Lucas, we can say. I'm a managing partner at Enabling Capital. So we're an impact investment and advisory firm. The bulk of our work is basically designing, structuring investment funds, fundraising and managing these funds. We currently operate out of several countries in the world. So we have offices in Switzerland and local offices in Africa, Latin America, Central Asia, Eastern Europe, as well as Pakistan and India. We currently manage one open-ended fund or plain vanilla fund in microfinance and fintech that has a global mandate, as well as the Spark Plus fund. Spark Plus Africa fund is focused only on sub-Saharan Africa, and it's better. Okay. And yes, and focusing only on clean cooking. When I embarked in 2018 in the adventure or journey of launching the Spark Plus fund with the Clean Cooking Alliance and my co-investment director, Peter George, we were very optimistic about the sector at the time already, right? I mean, we had met several true entrepreneurs that had a vision for the sector, that were using technology, carbon in an incipient manner, and had business models that were well crafted to cater to the low-income segment in sub-Saharan Africa. We felt as well in 2018 that the carbon market was starting to move on an upward trend again after several years of downward trend and significant volatility. However, this optimism and positive outlook was not shared by most investors that we met with at the time. We engaged, with development finance institutions, foundations, institutional investors, and many of them didn't believe that the clean cooking sector was a viable investment opportunity. Many investors as well that we met with, in our pre-marketing campaign, shared with us basically feedback, their constraints, some also concerns about the sector that I'm going to lay out for you. First of all, there's adverse selection culture in the investment community, generally speaking, globally, which deters investors from considering emerging markets and more specifically emerging markets in Africa, apart from investing in a few upper middle income countries. So that's one key element, probably the first one when we have to deal with institutional investors. A second one is that a sector like the clean cooking sector is definitely not proven, and many of the companies that we were optimistic about were not yet demonstrated any profitability, any true growth trajectory, lacking funding. Most investments in emerging markets that you can do today in small and medium enterprises would basically rate at par or 1 to 3 notches below the sovereign rating of these countries. So you're dealing, with basically sub-par and quality bonds or equivalent, if you'd like. Most investors as well are seeking liquidity. Acumen has been blessed, and some funds with welcoming patient capital to make private equity investments. But this is not the case, generally speaking. So it was important to think, of this constraint as well. We were fortunate enough, with the support as well of the Clean Cooking Alliance in the early stages, to benefit from the strong support of the African Development Bank. And they realized that a plain vanilla fund structure would not have been possible, and were keen to assess, the possibility to launch a blended finance fund. This blended finance, it can take many shapes and forms, right? As you know. In our case, we look at it, from a fund perspective, in making sure that we can mitigate basically the risk of investors by providing them a subordination, a cushion for their investment, a protection, some insurance against uncertainty, ideally as well a return enhancement. To give a sense, of what this looks like for the Spark Plus fund, I'm going to use the example of a dessert. It's a bit early in the morning to have dessert, but if you think of a chocolate mousse, right? It's one texture, one taste, right? At the end of the day, that's what specialists call a plain vanilla fund, so chocolate and vanilla. All investors are pooled into one vehicle, sharing the same risk and the same return. This type of approach, for a sector like clean cooking was impossible at the time. So we looked more at a cake and a layered cake. So we made use of the capital of the African Development Bank, the European Commission, which came subsequently in the structure, to create a solid base. And on top of that base, you can basically add as many layers as you want, depending on the type of credit enhancement, risk-return mitigation, that you want to achieve with different investors. For Spark Plus, we had an additional 2 layers. One layer was a mezzanine tranche, in which we are fortunate to welcome investments from development finance institutions, such as the Belgium DFI Bio and IFU, the Danish one, some foundations. And above, basically, this tranche, we went to pension funds. We welcomed 4 pension funds, basically, all of them from Switzerland, even if some of them are linked to international banks, but invested in a senior tranche. So this type of structure, right, presents on paper a lot of benefits. This being said, it's not an easy journey. It took us 3 years from almost 4, from the design structuring phase to the fundraising and the launch phase in March 2022 of this year. First of all, I mean, such a fund requires a decent understanding of the sector that we want to target. Now, we need to make sure that the products, the financial instruments that we're going to offer entrepreneurs and companies are well crafted, suit their needs, and are, from a risk-return perspective, basically sensible as well. Second of all, I mean, dealing, with this layered cake looks very cool on paper. This being said, you're dealing, with pension funds that are seeking return above anything else, while with a significant protection of risk. Development finance institutions and public institutions have their own interests and objectives as well. They have internal policies that you have to cater for, and this requires quite a lot of discussion, negotiation to balance out these, sometimes very dissimilar interests, and objectives under one roof. So COVID didn't help as well. We were caught, of course, in 2020-21 in lockdowns, not being able to welcome investors on due diligence, not being able, to visit our target investee companies. Our investee companies, some of them being on the verge of, working capital issues or working capital issues. Some of them went actually bankrupt. As you know, in the sector, it has not been easy. We finally raised, in 2022, $42 million, $43 million. We're currently at $55 million. We have deployed $10 million currently, and look to deploy 15 by the end of the year. I just want to give you a sense of the strategy of the fund as well, right? When we embarked, taking into consideration the broad range of companies and fuel types that we are targeting with Spark Plus. We're agnostic, meaning that we want to work with LPG companies, biomass, biogas, electric, stoves. We needed to be flexible with the type of capital that we could offer. So the fund was crafted as a 7-year fund. We can engage in long-term capital provision. We decided not to do it with true equity investments, but rather through a self-liquidating approach. So these self-liquidating approach, equity-like products are crafted as revenue sharing model or subordinated debt. We work, we provide also inventory finance to companies in a tripartite manner, involving suppliers, manufacturers with skin in the game, in the loan agreements with small distributors that we would not otherwise have been able to provide financing to, or a much reduced amount without this type of structures. We work with carbon project developers, which is, of course, an important topic currently. And we provide any type of debt, from regular working capital debt, inventory, receivable finance, general corporate debt, with different forms of collateral and security that you can think of, as well as structured finance when, we deal with companies involved in oil and gas that have a desire to engage in the LPG business in rural areas. We are looking forward to finalize the closing of the fund by end of this year, hopefully before the end of November, with an additional $10 to $15 million, closing the fund around 65 to 70. The idea, of course, describing you a blended finance fund is that going forward, just like in microfinance, and microfinance started 20 years ago commercially, and it started with lots of blended finance fund. That term didn't really exist or was not coined at the time, but it already existed. Many DFIs had been already investing in the first loss layers. And we hope that moving forward, the clean cooking sector will be the recipient, will see the development of plain vanilla structures through commercial funds, only invested by pension funds, insurance companies going forward in order to really tackle the issue at hand, right? The 2.5 billion people that need access to clean cooking energy. I just want to end my quick talk by thanking the Clean Cooking Alliance, my co-investment director, Peter George, here in the room, as well as the investors in the fund, the African Development Bank, European Commission, BIO, IFU, several foundations like Osprey and Ashden, and the pension trust that trusted us with their monies. I want to thank some donors as well. NORAD is one of them, and several others. The Dutch government, if I'm not mistaken, that has supported the project through the Clean Cooking Alliance. And thank you for coming today, and look forward to discussing. I know I cannot take any questions. Shrikant was clear about that, so thank you. Have a good day.
All right. I think we have time for just 2 to 3 questions before we move on to the next session. So if people have questions, we have mics on the audience as well, if people have any questions. There's one in that end.
Thank you. Morning, everyone. My name is Vanessa Cynthia from... Can you hear me?
Yeah.
All right. Thank you. My name is Vanessa. I'm from Sequest Capital, Zimbabwe. And I think my question is it's an open question. So I come from a country where investment is very difficult because we have an economic crisis where there's no stable currency. So this discourages a lot of external investors. Yet there's a very great need for clean cooking solutions, because if you're having an economic situation, then obviously you've got the rural community being neglected and excluded from all these great technologies. So I think my question is, how do I, in whatever role or my team or my company, how do we begin to overcome such challenges and kind of restore hope in investment in a country that, generally is discouraging investment?
I don't know if it works. You want to start?
Sure. I was struggling to hear what you were saying, but just to paraphrase, your question is and which country are you from, by the way? Zimbabwe. Obviously, I guess the currency is a big risk, right? Wow, so that's a challenging question. You want to go first?
No, but I mean, there are mechanisms that can be put in place. I don't know Zimbabwe very well, to be sincere, so I'm not going to comment about Zimbabwe specifically. But we do offer local currency capital. We have hedging ability with MFX, TCX. Actually, the large fund of enabling capital is a shareholder of TCX, so we can go directly through that window as well. We engage as well a lot in back-to-back transactions with local banks. So we are very happy to be put in touch with local banking institutions that you might be working with and see how we can, structure guarantees, back-to-back letters of credit, which allows us to work with these local financial institutions in USD on our end because we cannot take a direct local currency risk, and they can on-lend to your projects in local currency. That's something that we do quite a lot in countries like Nigeria, for example, to avoid as well currency repatriation, for example.
Yeah, just to add to that, I think in West Africa, we've had to rely on back-to-back lending with the banks, where we tell the companies not to convert to local currency, but to keep it with the banks and use that as a collateral to access local currency lines. So at least they're not exposed to the foreign exchange risk, because I can tell you that one of our companies in West Africa we invested in, at the last board meeting last week, mentioned that if they had like significant amount of their liabilities in foreign currency. Like what's happening now, they'll be bankrupt because we've seen currencies depreciate by 100% over the past 2 years. So that's one. And I think the other thing I'll add to that is, I think investors want to see companies that are fast growing. I know we've said you have to be patient, but at the same time, you have to be able to show scale and growth even over a long period that outpaces inflation and depreciation of the local currency.
Thank you both. Any more questions? Just one more over there. This is the final one, and then we'll wrap up.
Thank you. Thank you. My name is Tom.
Can you speak?
My name is Tom. I work with Sustainable Energy for All. Sustainable Energy for All. And sorry, can you hear me?
Not really.
Awesome. Okay. Unless if I put the mic in the mouth. So my name is Tom. I work for Sustainable Energy for All. And I come from Rwanda. And yeah. So I come from Rwanda, and my question is, we do not have enough organizations that are supporting energy projects. It's only commercial banks, and you have to survive on your own. And I'm wondering, what are your expansion plans for ready markets, like Rwanda that has a policy that has all the instruments in place, the market is ready, companies opening day and night, and government has put in place clear support mechanisms. So for such kind of ready markets, what are your expansion plans to kind of go to such kind of markets? Thank you.
Sure, I'll take that first. For Acumen, we actually have an office in Nairobi that covers East Africa, including Rwanda. So I know the team there is actively looking at pipeline in Rwanda.
Yeah, nothing to add. We work as well, and we have a pipeline in Rwanda currently. So this is one of the target countries of the fund.
All right, thank you, everyone. And we'll wrap up this session. There's no break, so we'll just transition to the next one. So we are trying to wrap up. And both Andrew and Javier. Sure, we can take one more question. But perhaps, I know that we are running a little bit late, so if you can just discuss with them outside of the room. Thank you. I know we are running like 25 minutes late, so we are just wrapping up. So yeah, as I said, Andrew and Xavier both will be outside of the room as well and throughout the conference. So and Rocio also, and I saw your hand as well, so we can discuss outside as well. Thank you.
Okay. Thank you.
Let's give these guys one more round of applause. All right, as Shrikant mentioned, we are a little bit behind in this room, so we're going to keep chugging along. We do have one logistical need from the audience. We're going to be using Slido as a part of the next panel, and so we're going to go ahead and ask you to get on the app and fill in the code so that when we get to the Slido portion of the next session,